Welcome back to the channel. Today we're here with my boy Kevin. Kevin, how you doing, bro?
Doing good, bro.
So he's one of my students, and he lives like 5 minutes away from me or something like
Yeah, not
that.
too far. Yeah.
Not too far from me. And I was like, hey, let's help you in your trading. Let's help you scale to $2,000 a month. Funny story, Kevin actually came to do some work at my house. And that's how I got into trading. He came to do some work in my house, asked me what I did, followed me on Instagram, and then like a few months later, he hit me up. It's like, hey, I'm gonna do this trading shit, and now here we are. Before we got, did you have any knowledge about trading, like what it was?
Not really. I had probably like the basics down of like what it
Like you heard
was,
of it,
but
like
I
you,
heard of
yeah,
it.
okay,
I
so like
never
social
really,
media.
yeah, I never dig down deep into the research and stuff like that at the time.
So we're gonna help him. He's been in mentorship for a couple weeks now. So he's got a lot of the technical analysis, like
Right.
basics down. I would feel like he's been trading a little bit, but we're gonna help him today. We build a full trading plan. Then we're gonna meet once a week. We're gonna gift him a fund or a challenge account for him to get funded and to get a payout. So Kevin, no pressure.
Yeah.
If we're gonna watch you, we're gonna show them their trades. The next time then we meet up.
Okay.
So yeah, we'll go at a coffee shop now. We'll hang out, get a coffee, go over how to build a training plan, and you guys will be able to watch it all. So make sure you subscribe, leave a comment, a nice comment to motivate Kevin. Because he's gonna get there.
Let's
So
do it.
let's do it. All right, guys, we got our coffee. So now we're posted up at the coffee shop. And the first thing always in a training plan, we're literally just talking about this right before we recorded too, was we're talking about risk management, how to manage risk correctly. Kevin started, you started, your first account was a
That was a
50,000,
50K, right?
50K Alpha Zero account. We're going to give him a 100K Alpha Zero account starting on Monday. Before those accounts, what have you been risking at 50K? Like, are you doing micros? Are you doing mini?
So I'm doing micros right now. I usually risk anywhere between like 3 to 5 micros, and then I guess due to like let's say if I feel like the market is easy to predict on a certain day, I'll go and I'll risk a little bit more like 10, so it's almost like one mini, and then and then I'll kind of like it'll jump my account a lot more, you know.
So
But yeah,
the main thing also is like when you're deciding on risk size is like also like what's your stop loss? Like what would you say your average stop loss? Like 20, 25 points, 15 points? Because like let's say you're like a guy that's like, hey, I'm trading with a 3 point stop loss, you can kind of get away with like two minis even.
right.
Because like your stop loss are like boom, instant, kind of like tight, and you're just trying to catch like a quick move. But if you're like, hey, I'm trying to catch a big chunk or like a medium size like day trade, like 4 or 5 hours, you might have a 40 point stop loss, and then you want to decrease it to three micros or 2 micros.
Right.
So like, what's your stop loss been at so far?
So on average, I mean, I'm still adjusting to understanding most of that. Like in the trading
Yeah, of
world,
course, you're
I'm
still
still
like
trying
learning. Yep.
to understand more of like how to set that properly and stuff like that. But I'm still doing, I guess, from your like kind of your classes and your courses. I was kind of going off of like a 3-to-1 ratio. So I was set to where we'll probably like I'll try to hit my TP. So from that, at least I would try to again like that way, like basically that 3-to-1 ratio. I guess I'll set it at like around there. Like I don't have I'm not too good right now at setting like a specific stop loss.
Are you setting hard stop losses or like soft stop losses?
I guess a soft one for
You
now.
you know
Yeah,
doing
I'm
hard?
setting. Yeah, I guess.
So
uh,
so I personally do use soft stop loss as well, but I would say when you're first starting out, you're gonna have a hard time to be disciplined to actually exit.
mm,
So I recommend set a hard stop loss. Keep your stop loss between 20 to 25 points. I understand sometimes the range is bigger. Like Friday, the range was really big, and you do need a bigger one. But that's when you size down. The position size 3 to 5 micros on a 50K, I think it's fine. I think one mini for 100K and like 15 micros for the 150Ks. Those are usually the good position sizing. If you have around a 20 point, 25 point stop loss, if it's going to be even smaller, you could size in. Like sometimes the opposite is true, where the range is not that big. It's actually like a tighter range. It's been kind of chopping for the day. I usually will size up because I'm like, hey, it's only going to be a 10 point stop loss.
right.
My TP more likely it's going to be even, it might be only 30 points versus a typical 50, 60 points. And then I will just like size in and trade a little heavier. What about for your trading? You've been doing one trade a day, two trades a day, 3 days a day. Have you been disciplined with how many trades you're taking? You've been disciplined with the sessions you've been taking. Like for me, I try to do a New York session, maximum of 3 trades. Now, if somebody's like, hey, I like trading Asia, I like trading London, I have no problems with that. The problem that I have is when people are like, hey, I'm trading Asia, London, New York, and like 20, 30 trades a day.
Right.
Have you like what? How you been? You been doing good? You been managing that?
So right now I've been kind of playing around. Like at the beginning, I started to play around more about just trading kind of on a consistent basis, so I can get used to
Yep.
like just seeing the chart more often. But I guess my discipline part of it, like when let's say like trading on like a point of like trying to pass and a point of like even after. About three to four times a day, but I'll stay in the New York session
And all
around that
three
time.
those 3 to 4 times a day, are they like full size trades or like, yo, yeah, I'm gonna just try a small trade here. It looks kind of good, but I'm not sure.
Yeah, I'll probably position a little smaller in those trades, and risk a little bit less in those trades, especially if I'm on like on the funded account. But if I go into like a practice account, if I'm on like TradingView and I'm practicing on a paper account, then I'll try to go probably for like the full thing, and I'll try to scope out like a trade for the day. Um, but if it's on like an actual funded, I'll the maximum I'll probably do is like three to four
And
around there.
you were actually doing pretty good, right? Like you were doing quite good for
Yeah.
up till Friday, and then Friday you had some issue with like your stop loss, like you couldn't
Yes. Yeah.
figure out your stop loss or something, and then we lost a little bit there. But like you've been doing overall pretty good.
Yep.
So yeah, New York trading is New York session is fine. We taking your trades. Uh, we understood the risk management now and setting daily loss limits for the day. I know you're on the zero will automatically give you daily loss limit, but I'd say once you get to the standard, once you get to the advanced, make sure you're using it. You know, when you're funded, they always give you a daily loss limit. But when you're in the challenge phase, you do need to set it up. Or
Okay.
if you trade a different prop firm, I highly recommend setting up daily loss limit for everybody. Just because like you've probably seen this, like you're crushing it for 4 days, and then that one day that like you're not doing well, you'll go red a little bit, like you're like down 500, and you take
Right.
another trade, you're down 1,000, you're like, oh, I gotta make it back, and then you keep trading, and then before you know it, you just lose all your process. If you just had like a daily loss sum of $1,000, which I think is a solid one for 100K, and then 1,500 to 2,000 for an 150K, and 500 to 750 for the 50Ks, you can lock off for the day, and then start thinking like come back the next day when you're fresh. Like
Right.
I did all the time, like and I think it's very helpful, like knowing when you gotta walk away. I was like, we want to be right, and I want to be green every day, but it's not that easy. Like some days you'll be red, even a week you'll be red. Like it happens to all of us. So we have to really master the emotion aspect of it. Mm.
No. Right.
All right, so we'll jump into the charts now. We'll look at some of your trades that you've taken every day for the mentorship students. I asked them to do a report card, so we'll go over a couple that Kevin has done. This is from when is it? 13 is on Monday.
Yeah.
So we'll see how he's trading and he's learned, and then we'll go over some of the confluences that I teach and then we look for. So we give a rating to every trade. He gave this trade an A bullish trend, 10 a.m. reversal for value gap. I do wish if it's an A trading, you go in a little more detail. We have an SMT.
Okay.
What time frame was this SMT on? We have a higher time frame key point, right? If it's a true A setup, I don't know if maybe it's in the trade. Like when I'm looking at it, I'm looking for a high time frame, right? So what do I have in a high time frame? Do I have an SMT? Do I have a fair value gap? Did I have daily opening close? Like what was I rejecting? What was my key level? Then that made me zoom in and find my lower time frame entry. And then the lower time frame entry can be, like a bullish trend for value gap retest, 10 a.m., golden pocket, like whatever it is. And then we really split it open. And that's what makes it a true A plus. A true A plus is we have the higher time frames lined up with all the low time frames in it. Pretty much from the daily all the way into the 5 minute and the 1 minute. All traders are looking at that trade, they feel bullish or they feel bearish. And then when you enter a trade, it's zero drawdown and you go straight to the B. Those are like what I call like the A plus setups. And those are the trades you really want to double down when you go back and like look at your journal, you look at the trades you're taking, that you want to like reverse engineer as much as possible. I tell people like if you focus on like the best trades possible you can take and just see how they perform and see how you can find them, and then you start only looking for those, like that is a lot better to try to fix like bad trades that you shouldn't have been looking at anyway. So it's a little hack that I like to do. So we'll see the trade that you take here. So on the 1 minute, I don't know if you had your executions on or you didn't, but it was right off the open. We can actually we'll jump on trading view and look a little deeper, but I like, from what I can see down here, you had this nice fair value gap retest. You had this inversion right here on the 1 minute, then you retested it with displacement with the fair value gap there. I'd love to see if there was like an SMT here. It was like, you see here, we have this big strong move on 9 a.m. on NQ. Well, actually, let's jump to trading real quick. All right, here we are. All right, so let's look at this trade. I'll tell you what my thoughts were behind it, and for the next trade, you'll tell me what you see in the market. So first thing I noticed was so right here we had this set of essentially equal lows right there on in the pre-market. Big move up, pull back to it. As you can see here, we took him out on NQ and ES, and the opening was looks like it was a pretty choppy range of the opening. Then on the 1 minute, we can't zoom in on the 1 minute because trading view. I don't know what's up with trading view right now. It's not even zoom into the 1 minute. The 1 minute we had a big V shape after we took out a low day into a bounce, and then we essentially looked for this high here and potentially all these highs up here. So I took that long with about, it was at right 9:45, so it was right on this candle. So I took that long with a first TP. It was right at this 9:45 with a first TP being up here. Again, it was a super choppy tight range. We only had about a 6 point stop loss. We were able to TP at around 14, 15 points, which was a 1 to 3R. Again, nothing really crazy, but then after we were able to catch another move back to the upside, which is much better. It was around 10:20. Again, big manipulation leg down. Same idea. Yes taps into this larger time frame for value gap, and Q taps into this larger time frame for value gap. I believe we also might have been a golden pocket level right there that was holding up after we had this massive move the day prior. I think it was when was it overnight, right in the pre-market. So if we look at this, yeah, so we're holding that golden pocket, candle closing above it, and then we looked for another long. Again, now that we're targeting this equal highs all the way up here, we came shy of it, but we still were able to come out in profit because we move up our stop loss. We take multiple take profits, and this other trade was again about 25 points. Nothing really crazy, but still, like you take 25 points when you don't have them. And then I think later in the day, then we eventually caught the short after we failed to break those equal highs. I believe then we had a move down, inversion for value gap sitting right here, and then we had a nice retest right here, inversion for value gap. And a lot of things I like to do is we'll do an inversion for value gap and versus just like entering right away. I'll wait for the inversion to get tested, like we see here. That candle close, and then you catch the move down. Again, this day was kind of like a pretty boring day compared to the rest of the week. Right. Even this move was like 100 points, was pretty solid. But like compared to Friday, Thursday, where we had like this really big 100 point, 200 point, 300 point winners, a little bit different. Now I don't know if I'll call this an A setup. It was a nice scalp. I don't know if I'll go as far as saying an A setup. So do you have a trade? I think we took on Tuesday. It was like 400 points. Did you take that trade
On Tuesday?
I think it was either Tuesday or Wednesday. We had that long that was just like a crazy long that just like mooned up.
I think so. Maybe I'm not too sure. I might have been there for the session. I'm not sure if
Don't worry, don't worry.
okay, but I believe so.
I do want to give you a quick test. All right, a quick test. So here I'm gonna write what is an A plus setup. Sorry, can you hold this for me? Thank you. Yeah, I might change the color. So if we're gonna have a trading plan, we went over the risk management, we went over we'll do black and yellow. Like yellow, oh my god, let's throw back. Oh, what did I do with that? Oh shoot, I just deleted it. I just deleted it all. Alright, what is an A plus setup? So I want you to tell me what confluences you're gonna look for, and first we're gonna go to the high time frame, and then we'll go to the low time. What confluence would you look for if you're looking for the high time an A plus setup? Again, you don't have to mean all the confluences are gonna be there once, but the ones that you're looking for. And look, just do as best as you can.
Yeah.
I'll come in and I'll add anything that I feel like you're missing from it.
Okay. So since I'm still understanding things, because I'm not too.
Yeah, you just started, so don't worry.
So it's like I don't really know.
You're not
too
getting
well
graded now. Maybe
information-wise.
next week it'll be different. Next week, you know what I'm gonna do next week?
Yeah.
Depending on how you discipline you this week, I'm gonna have different rewards for you. So if like Kevin every day was disciplined, he followed his plan, took only A plus setups, I'm gonna give you something. If you didn't, I'm not gonna give you something. So no pressure on you, but like this will be fun. Or maybe I'll give you a little test. I'm just gonna I don't know. Maybe I'll give you the key to my Porsche. Who knows? That'd be nice.
That'll be dope. Okay. I know with high time frames or anything I've been like learning so far that I've been like keeping up with. I mean, I know you guys when we trade live or we kind of trade. I know we also look for a higher time frame for value ups. Because I know they're sometimes more strong than like a like a 1 minute and things like that. So look for like a 5 minute, 15 minute, or maybe even more, I believe.
And what is the key point of like the for value up that if it's let's say it's good, like a trend up,
Okay.
we come to retest. What is the key point that we really like to see a bounce from in that for value up? Is it the top of it? Is it the middle of it? Is it the bottom?
The
Like,
middle, I feel like it's usually more where I see where.
and we call that a
catch it.
CE. So a CE, which stands for I don't even know how to say consequent encroachment, is a 0.5 for value gap, and it tends to be an area that we like to see to come retested if we're looking for a retest and a continuation.
Okay. Um. So another high time frame. Okay. What else would I would go with?
What about like a weekly opening or a weekly gap, right? Like that was important last week. We had a big gap up,
Okay.
right? So we were looking for like weekly slash daily gaps, right? Remember that week we crashed down and then we had a big weekly opening gap. We
Mhm.
came down to retest and that's where we got that 600 point moon off of.
Okay.
And that was I think on Tuesday or Wednesday. We'll jump into the chart. We'll look at it a little bit. So those are really important. Those big gaps, those big empty spaces. The market wants to come refill
Mhm.
and then we use it. The way you have to think about weekly and daily gaps is very similar to like how fair value gap works. So fair value gap is just like a very small gap that we're using intraday, but it's usually an area of low volume that the market wants to come rebalance because the market wants to be efficient, right? Where there's a buyer, there's a seller. So come rebalance it, and after the rebalance, we might continue that trend. Right.
Okay. Um.
What else?
Man, I don't know. It's
Think about your
just
lower time frames. A lot of times, it's like the same things you look for a lower time frame. You might want to look at on a higher time
the high
frame,
time. Okay.
like a higher time frame, like the high time frame golden pocket, right? We use that for rejection point. I think it was on Thursday or something like that. I
I
don't
was gonna
remember.
say yeah. I was gonna say golden pocket because I know we look at like what like a previous session,
Yeah, a
highs
lot
and
of times
lows, like previous
pre-market,
section highs and lows.
pre-market, right? Yeah.
Okay. So would that be the same when they say like previous session highs and lows? Would that mean like would you use the Fibonacci for that basically?
No, so if I'm like research high and low, I'm just that's usually gonna be more of a target
Okay.
for my TPs or a potential area. Like we took out the previous day high
Gotcha.
and then we reverse.
Gotcha.
This was on Friday. Yeah, I think it was on Friday or Thursday was an example that we took out, and I posted the video actually today on my Instagram
Mm.
of that trade that we took, and we targeted the previous day high as a TP, and then price reverse from it.
Okay.
All right, these are all grades, these are all levels that we're looking at, and we're trying to mark out. Now, a lot of times, some of these levels will overlap, and those are the best. Like you have a previous day high, and it also lines up with the weekly move of the GP,
Hmm.
right? So a lot of times these levels overlap, and the more you can find, the better the trade is, right? So now we'll jump to the lower time frame entries. So lower time frames for me is like the trigger that's like, yeah, I have this idea on the higher time frame, but now what is my trigger that I need to when do I actually pull that trigger? Because if you're looking for like a month, hey, we're in the middle of a monthly gap. That's like a 600 point range, right? Like
Right.
you're actually like, okay, what am I doing here? Like you can actually take a trade off of. That's why we're using for this lower time frame entry models to it. So what are some of the things that you look at here?
I mean, just as much as I would at a higher time frame, I would still at the lower time frame still catch like I guess like a 1 minute for value gap. Would you still use it for value gaps
Yeah, we'll
for
say the
lower time
one
frames,
minute
right?
slash 5 minute for
Okay,
value gaps. Now
right.
this can also be or an inversion for value gaps. A lot of times it'll be both. A lot of times what I want to see is we take out a level, for example, we take out the previous week low, then we do a 1 minute big move out of that, like a big, like we see a V shape, we take out, and we build a 1 minute gap, a bullish gap, and that also inverses a previous bearish gap on the way down. So a lot of times you get them like that, right? You're getting the displacement in the form of a bullish gap being built, and you're also getting the inversion for value gap, which is showing you order flow is switching from bearish to bullish. And order flow is simply are the bearish levels being respected or are the bullish levels being respected? A lot of times during a trending day, you'll see, hey, any bullish gap just gets ignored. Like it's just bearish. As soon as we tap a 1 minute bearish gap, boom, next leg down. 1 minute bearish gap, boom, next leg down. This means it's a bearish order flow. It's a really strong bearish order flow, and you do not want to fade that. You don't want to fade it. You want to continue that trend. But as soon as you start saying, hey, the bearish gaps now are getting disrespected, the bearish highs are getting ran through, the bullish shells are being respected, then you're like, okay, I can look for this reversal, right? All right, what else do we look for?
Trying to think here. Trying to think when I look at a chart.
Previous day closing price, right?
Yeah, I usually have that preset
Yeah, you
on my
have.
settings. I'll have
Yep.
that kind of there already. Just as like a guide. What else? Yeah, I'm just trying to think as much as I have like clear knowledge on trading so far, as much as the other guys.
Yeah, of course. A smaller time frame golden pocket, right? So if you take out a higher
Mhm.
time frame level, then you make a quick leg up. A smaller 1 minute, 5 minute leg up. You can draw your golden pocket there, and it usually flings up with a fair value gap. You can enter off the retest, right? So, a golden pocket here. You're missing one big one. What is one you think you're missing? The amount when a high or low gets taken out, what do we call that?
Like what do you mean? Like once the higher
So let's
gets
say there's a high, the
okay.
high gets taken out, and then we reverse down. We just took out what? Some liquidity, right?
Liquidity sweep
Yes.
usually, or
Yeah, you can call it liquidity sweep. I
okay.
just like to call it liquidity.
Okay.
But yeah, we just took out a high or a low. And what is the saying that I always like tell you guys in the group chat? What do I always say? What do I like to do?
For what exactly? I'm just trying to.
So never. So okay, always short above a high, always long below a low. Right? And I tell you
Okay.
guys in the chat. So what do I mean by that? It's versus. So this is what the market likes to do. The market loves to, let's say I'm in a trend. So let's say boom, trend reversal here. Then it goes sideways. Market loves to come down, take out the previous 1 minute lows, and a lot of people are like, okay, let me short here. They get trapped here, and then you'll keep going to trend. Because the market needs liquidity, right? So it'll come take down the previous low, and then it'll continue to trend. The market needs liquidity to continue its trend, right? You can't just like, hey, it's very rare. Like it can happen, of course, but it's very rare. It's like goes one direction, does not do any pullbacks. But what a lot of people get trapped in is they do want to take a certain break of structure here. Let me short, let me long. But no, in reality, it's the market taking out liquidity to then continue trend. So I'm looking for entries. I don't know why the long position tool is not working today.
Yeah.
So I'm looking for an entry after these lows get taken out. So I'm only longing below a low because these lows get taken out, then I enter and I go.
Okay.
Right? Or the opposite is true. A high gets taken out and I'm shorting. Well, a lot of people are like, hey, I'm telling you, the high just get taken out. Don't you want a long? But how many times do you get trapped in that trade? Right? So that's a general rule I like to follow. Now, can you sometimes enter when a low gets breaking out, like a breakout trade? Yeah, there is some opportunities there. But I will say as a general rule, I'm looking for this type of scenario, this type of move, right? And then this, right? So if we drew this up, this will be our high time frame key area down here, right? So we'll put in high time frame key area, right? So this will update in a second, I think. Then I'll press enter. Then here we get a fair value gap. Fair value gap. Here we get from the high time frame key area low. Let me get my flip proof. To the high. Like I do that shit perfect. Our golden pocket. Here we get some kind of inversion in here, and then we take the trade. So this is how we want to look at liquidity gets taken out. Golden pocket is there. We have a value gap that was built that's telling us we're getting displacement to the upside. Order flow is changing because we're getting an inversion for value gap, and then we fucking enter. So you see how I'm putting all the puzzle pieces that we drew here, I'm putting them together to find a trading setup. Now, you have the hard part is like you don't get FOMO, you're just waiting for this. You're not like, hey, the market's moving, I just gotta enter. The part of trading is that you stay disciplined until the market shows you its hands by like, hey, give me all the confluences, then you take your trade. If the trade doesn't fit your confluences, then it's not a trade, right? Like you're not gonna catch every move, and it's okay. We have to be okay. That's like, hey, I'm waiting for my move, catch my move. Now you see a week trade. We get a couple setups a day, right? Right. We get a couple setups a day. So the moves do happen. It's just you staying patient and disciplined. Like for example, on Friday, a lot of people were getting destroyed in that opening chop, and then the day was amazing.
Right.
But they were getting destroyed in that opening chop because they can't just sit around for 30 minutes and wait for that.
Right.
Do you feel like that's something you've been struggling with, just like sitting around and like waiting?
Maybe not necessarily. I don't think that's more of my issue. I guess, like I said, I think if I feel like working on my position sizing or things like that, like even if I do take a bad trade, I feel like if I didn't overdo it to a point where, like, all right, let's say I was green, like, let's say, for the day previous and I go red a little bit, or depending on how much, I'll probably not want to trade again. And it's just like the psychology of wanting to catch another trade for the day. So if I feel like I'm already negative, I don't want to risk it again. And even if it goes positive after, let's say even with a setup, I feel like I don't want to take that risk of it going even lower or basically going the opposite way of what I predicted, what we predicted and things like that. So but I feel like if I risk less or had better position sizing where I'm not risking too much at a time and I can catch those other types of trades, then maybe I would, like I said, maybe it would be in my best interest to wait a little longer and to kind of catch a better trade than it was earlier in a way.
And 9:30 the market opens, and like when do you Like how quickly you find yourself in trade 9:45? You think you already took a trade by then? You wait for the 10 a.m. the opening range to be built.
Yeah, I don't trade immediately. I do wait anywhere between like the first like 30 minutes to 40 minutes usually, like within that range. But then sometimes where we it does go like to where I trade again around like 10:30ish. Um like for anywhere between 9:30 all the way to like 10:30. If not, obviously 11:30. And then I'll probably hop on again, like to my other two, three trades. I'll try to take in like, a little later. Um, but usually it's always between like the first 2, 3 hours of the day.
All right, so guys, I'm gonna put him into a quick test. We're gonna be using Tradeful. So we're gonna go to start back testing, and I'm just gonna ask you to very simple. We're gonna pick one day, and you're just gonna give me like how you drew it up. Like, what would you think would be a trade to take? Nothing, no right or wrong day. The internet is a little slow at this coffee shop, so it might take a second.
Check this out a little bit more.
All right, Kevin. So we are in a random day. It's Monday, September 1, 9:30 a.m. Show me what you're looking at. Here, what do you see? First, again, no wrong answers. Just tell me what you see here, and I'll tell you what I see.
Okay.
Using Tradeful backtesting software, best backtesting software out there.
Okay. So, I mean, what I would just the first
What would
thing
you mark out here? Like it's 9:30 open. Like what stands out to you? What would you mark out?
I would mark out the highs and lows. I don't
Okay.
know if that's like the first thing. I mean, usually I would try to see the high and low, and I guess I'll mark that out with the tool, and then
Go ahead, mark it out. Mark it out for me.
I mean, I don't know if this would be it.
Again, no right or wrong answer.
Okay.
Don't worry about it.
See, where is it?
The one above. If you're looking for just the high and low tool, the one above that one. The one above, yeah. You can hold shift when you put it down. So if you like click it and then just
So what? I'm just trying to. I mean, I don't. I mean, by high and low, like I was just kind of.
yeah, pre-market highs. Yeah, that's perfect.
Okay.
So that's your whole pre-market low. That's Asia London.
Let's see if I have the.
Click it out.
Let's see if I can just click it here. Is in that one?
It's here. I don't know why the Wi-Fi is kind of ass here, guys. So a lot of this shit is not here. I'll do. Yeah, I don't know why the Wi-Fi is kind of ass here. So all right, let's imagine we marked out this high, we marked out this low. Yeah, maybe we can. Well, what if we draw it? No, I don't want to.
Exchange.
Yeah, the Wi-Fi is kind of ass. All right, yeah, that's perfect. So you marked out pre-market high and low. What is this trend? Are we in a bullish trend or are we in a bearish trend? Just looking at this 5-minute currently. We're gonna zoom it out a little bit. Oh, there you go. Now it's working. Oh, whoops. Now it's working. So we can mark it out now. Now we got it to work. Okay, Wi-Fi is not the best as we're sitting outside. So let's mark out the pre-market high, pre-market low. There you go. All right, so we had a bearish trend. Now it looks like it's kind of turning bullish, right? What else stands out to you? We got this bullish fair value gaps right here. This big one, right?
Yeah.
This really big one down here. That's something that stands out. We got the smaller fair value gap right here that we're currently bouncing on right there. So for me, it's like we got equal highs above. We are overall, if we go back in the big bearish trend, but we're still leaning to potentially look for the long because we got equal highs above us. We have no SMTs as far as I can tell. We do not have any. We might have a bearish SMT. No, yet. If this came in tapped here with a bearish SMT off of these lows, that would have been even nicer, but we don't have that. So 9:30, I'm still leaning bullish. If we get a bounce here, let's skip one candle forward here. We'll just skip one 5-minute candle. Boom, move down, right opening, big move down. Now with this big move down, a lot of people are like, "Hey, this might be bearish." I still wouldn't feel extremely bearish about it because look what we just got. This big SMT right here off of ES tapping these lows and in Q not tapping these lows. So I'm still kind of not really feeling the bearish side just yet. Again, I will just be watching. Let's jump to the 1 minute as well on both of them. Hopefully the Wi-Fi is not too slow. Come on. All right, there you go. All right, big candle down. SMT off of this candle. What I'm noticing now, we have inversion for value gap right here, right? potential. The candle doesn't close above it, so there is a potential. There is an inversion for value gap. We'll move this forward a little bit, one candle forward. Oh no, I was in the 5 minute. That just ruined everything. I was gonna say this is
Yeah.
you're right. I had that on 5 minutes, so I skipped 5 candles forward. Mistake on my end. But here, this would have been a perfect long.
Right.
Targeting. Did you see what I was seeing?
Yeah, I figured.
Did you
Yeah,
see what I
I
was
knew where
seeing?
and yeah, I kind of
Those
knew
equal
what
highs on
you
that
feel
end.
like. Right.
A lot of
See
people
where
are
you
like,
feel.
oh my god, 930 just nuked. Short. No. Look, zoom out. SMT at the bottom. We just got a big V shape up.
Right.
Inversion there for the confirmation. Let's also look. I think this SMT right here. Also I think came to potentially our fib retracement. Let's take a look. Maybe the 0.5. I don't know. I think maybe ES here came down to the GP. Let's take a quick look for added confirmation. Look at that. Right into the GP on ES.
Yeah, I see.
That's also a form of SMT when one comes down to the golden pocket and the other one doesn't.
Right.
This one did not come down. But again, showing a strength between the two assets. So this 5 minute now, you're trying to ride it up. You would have taken TP by now. Stop loss already a break even. Targeting those highs. We'll let this play out a little bit. Look at this. There you go. Full TP over the head right there. Did you see what I was saying though?
Yeah, I did.
But you see this confluence we talked about before, connected together. Random day, I did not know what was gonna happen. Just giving you guys exactly what to look for. In Q, full TP. So is everything making sense to you, Kevin? What do you feel like it's missing right now?
So, everything's making sense. In a way, it's just kind of more so as a beginner trader. I feel like it's just what to really focus on in the beginning to kind of have more like of a disciplined
So like a plan,
more of like a plan. Like what do I usually use to kind of just focus on more in the beginning, to kind of help me out as a beginner trader instead of being lost in all this information and kind of having to
So
like
what
work.
first thing you need to do, right? Let's say you train at 30, 15 minutes before, show up to the charts, mark out your high time frame key levels. After you mark out your high time frame key levels, then at 9:30 opens and you wait for price to hit your key levels. You wait for price to show you a potential reversal, a potential confirmation at your key levels, and that's when you pull up. You can have it, written down on the side. You can have it sticking on your thing. So what are my confluences? An SMT. Do you have an SMT there? Do you have a value gap there? Do you have an inversion for value gap there? When all those you're like you can write like a check mark, like yes, yes, yes. Do you have a golden pocket there? Yes. And you just simply trade. You take your trade, and then you just set your stop loss. We already talked about the risk management, how many contracts. You should already know how many contracts you're going in. You set your hard stop loss. Again, start with a hard stop loss and then work your way up to a soft stop loss. You gotta have some experience to trade soft stop losses. So I don't recommend beginner traders to do that. See your TPs where they need to be. You can set hard TPs. You can trail it, right? When you hit TP1, go to break even. When you hit TP2, move it up in the green, right? Move it up to where it makes sense on the charts. And then you just gotta let that trade play out. The exact confluence I told you on the lower time frame, that's all you have to look for, right? You have 3 out of the 5, that's good enough for a trade. You have 4 out of the 5, even better. You have 5 out of 5, even more amazing. You need at least 3 out of the confluences that we spoke about after your high time frame key level. But the high time frame key levels that you marked out should have done before they even trade, before even looking for a trade. You should be doing that 15 minutes before you show up. The 20 minutes you do that you show up. Previous day highs, previous day lows, just like you had any major fair value gap. We had a big move up. Mark out a fair value gap. Did you have an SMT there? And that's when you look for. Does that kind of make sense? It's a lot off the beginning. It is a lot to think about. But then when you do it 50 to 100 times, you starts becoming second nature, and you start seeing that.
Yeah, no, for sure. I think once I get down like to the notes and having that down planned out, I guess it'll help out a lot and just mentally going into a trade. I feel like if I had it all planned out and had the check marks and had everything
Right, yeah, write it down.
slowly
What I
right.
used to do is write down a notepad on my like hand and paper. I really like the hand and paper stuff. And it's like, okay, this is my plan. My plan is 9 to 9:30, marking on my high time key levels. 9:30 on, watching the charts, waiting for my high time key levels to be hit. Okay, then after that, my high time frame key level gets hit, I'm looking for these 3 to 5 confluences. The 3 or 5 confluences are happening. Then what is my risk management plan? 3 to 5 micros. It's hard stop loss, hard TPs.
Okay.
And then you let it rip.
Yeah. Okay.
All right, guys. So this is it for the first episode. We went down, taught him everything. Hopefully now we'll see how his 100K account goes. We'll meet next Friday.
All right.
Kevin, No pressure. We're gonna show every trade that you take. We're gonna show where the balance is at. So, no pressure.
All
Anyway,
right.
put in the comments what you guys think he's gonna do. He's gonna blow it the first day, the second day. Is he gonna pass by next Friday? I don't know. Leave in the comments below. Subscribe. As always, see you guys in the next video.